Maybe it's time to move out of Houston. No,
No,
I
my
didn't say
God,
that. I didn't
don't
say
say
that.
that. You don't want that. I don't
No, I
want
don't want
that.
that. Housing affordability has been hurting Houstonians. I'm going to cover the 3 big issues that Houston homeowners have been facing. I'll be having discussions with some of the experts on why this is and what the future holds. And later in this video, you don't want to miss the controversy over water billing.
Mayor Turner, I'm so sorry. Will you stop payment to the contractors that are under investigation?
Let me stop.
Yes.
Amy, you're very rude. I want you to know you're not going to get away with this. You are rude.
Hi, I'm Adam Sanders, the Watchdog Realty Group. Let's get into it. First up is homeowners insurance. I don't know about you, but mine has skyrocketed over the past few years. Has your homeowner's insurance gone up over 50% at least in the last couple of years? If so, why is that? I had the opportunity to sit down with Kristen Jones with McKinney Insurance to get some answers on why this is happening. Homeowners insurance rates have skyrocketed and homeowners are feeling it in their monthly payments. But why? Here to answer that question and many more is Kristen Jones with, that's your prop to say where you're from. Big Bad Boss Lady. I love the name.
Yeah, I decided to put that on there. I'm the owner of McKinney Insurance. We're a local insurance broker in the Clear Lake area, and we write insurance policies all over the Houston area. And Adam, I've had the same conversation with hundreds of homeowners about their rates going up by 50%.
Yeah.
100%.
Let's look at what some people have said. I've actually posted this on Facebook a little while back, and it was a real easy question. How much would you say your homeowner's insurance has increased within the last couple of years? And I was surprised at how many people felt the need to answer this question. We got doubled, skyrocketed, crazy high, 70% increase, and it just goes on from there. Do us a favor and help us understand the history of how did we get here? Why are we in the predicament that we're in?
Absolutely. So the past few years, probably 2 to 3 years, the insurance industry is experiencing what's called a hard market. And this means that insurance carriers are becoming more and more few and far between. There has been 4 to 6 major carriers in the last few years that have claimed insolvency, which is bankruptcy due to paying out claims.
Wow.
It's insane. I've been doing this for 16 years. I've been in the industry for 16 years. And before these past few years, there was one carrier that we had that went insolvent. And the past 2 years, there's been like 4. And so with carriers going insolvent, with carriers non-renewing people and leaving the state of Texas, opting not to write here at all, the carriers that are left over are able to increase their prices because there's a lack of competition. We had 2 tornadoes tear through the Deer Park, Pasadena area back in March of 2023 that caused hundreds of millions of dollars in damages. Hundreds of millions. So these carriers are just paying out buku bucks. And with insurance companies, they're trying to make a profit. They're trying to make money. They're not trying to pay back out on a whole bunch of claims. And so when stuff like this happens, they have to evaluate how much concentrated risk they have in one area. And if it's too much, they're going to try to lose some of that. They're going to non-renew people. They're going to try to underwrite it to where they can lose people by saying, we don't want anybody with houses over 10 years old, that kind of thing.
My investment properties through you, and something I've noticed just through my claims is they're getting really particular about roof ages. Like they really want you to know how old the roof is and almost mandating if it's too old, you got to replace it. They won't even insure it.
They are not playing around with us anymore on coastal Texas roofs. If your roof is 15 years old, you're probably going to get railroaded into proactively replacing it rather than relying on insurance to pay for it in a claim situation. It's the same sort of situation with a roof. Once your roof gets to be old, it's not any storm event in particular that causes it to need replacement. It needs replacement because it's worn out.
But I've seen some of these roofers come through neighborhoods and like have you had hail damage and they're wanting to replace your whole roof, and they have some access to when hail ever hit your house at any point during its history and able to do that. So maybe a little manipulation on contractors is probably not helping this situation either.
Absolutely. And that's part of why everybody's rates are so high and insurance companies are so sensitive to it, is because these contractors, I've even heard about contractors going up onto roofs and pulling up shingles to make it look like there's wind damage so that they could file a claim and get a customer a new roof through an insurance company. If you are looking at your roof or you need an estimate for a re-roof, please just pick your own contractor and try to go through somebody honest that is a recommendation. Don't just use the guy that's walking through your neighborhood after a storm event, because they're in it to make money.
Let me ask you this question. If you're a new home buyer and you're looking at a resale home, kind of help us understand and gauge how old should the roof be and the major components be, so they're not worried about the insurance part of it.
Absolutely. So if a roof is over 15 years old and they're taking into account depreciation, that just means that you're probably not going to get paid for a new roof. Or they're going to cut into your payout a whole lot in order to do a new roof. So if you're a home buyer, be looking for houses that have a roof really no older than 10 years old, because then you won't have to worry about it for a while. If it's 15 years old, you're right on the cusp. If it's 20 years old, I mean, Adam, you can speak to this, but I would make it a part of your negotiations.
Yeah, exactly.
Replaced before you buy the house.
Yeah. For those that have existing homes, what can you guys do to help mitigate these costs or help keep these costs down for them?
Absolutely. Well, as a broker, McKinney Insurance will shop through every available carrier that we have. We take a special interest in our clients to give them exactly what they need, rather than just giving them a blanket policy that we give to everybody. We're going to talk to you. We're going to tweak coverages to be whatever it is that you prefer. And we'll try to eliminate high costs by taking off coverages that you may not need, increasing your deductibles, that kind of thing. But we're going to customize it so that we can do that for you. And we also have as many options as we have available, we're going to shop through. So we're constantly looking for new carriers. We're hoping that the market will soften as new carriers come in and try to absorb, some of this risk here. If I have a really bad deal and I'm quoting somebody, I'm going to tell them that, hey, you might be able to do better. You should really try to shop this around because I don't have a good deal for you. But that's just part of why people love us so much, is because we really do care about doing what's right by people, and we want to have integrity to tell them what's best for them rather than just selling new policies.
If you're trying to predict, when do you think maybe some carriers are going to re-enter the market and try to, because competition will bring the prices back down in any market. Right. So what do you anticipate that? Can you foresee that?
What we have been told, and we are really, everybody cross your fingers right now who's listening, say a prayer, go do whatever it is that you need to do.
Yeah.
But we are really hoping that the market will start to soften either in this new year, like third quarter, maybe, or 2025. Okay. We've heard this year. We've also heard 2025, but we just need to not have so many claims.
Yeah.
I mean, the random storm events, it doesn't even have to have a name to cause hundreds of millions of dollars in damages, like those tornadoes that went through Deer Park, Pasadena last year.
Yeah. Or the freezes.
Yes.
Or the hurricanes.
I forgot about that one, but you're right. That was another, that was as costly as a Cat 5 hurricane. That
the freeze was?
Freeze.
Wow.
Winter Storm Uri, I believe it was, that caused everybody's pipes to break.
Yeah.
That was as costly as a Cat 5 hurricane for the insurance companies.
Maybe it's time to move out of Houston. No, I didn't say that. I didn't say that.
You don't want that.
I don't want that. We know what we get living here. We know the consequences. We just pray that we don't have anything more catastrophic and that more people enter the market, and hopefully that stuff will come down.
Hey,
and when they call, did they just ask for the big bad boss lady?
Big bad boss lady. I love it. Yeah.
Hey, I'm going to make it easy. I'm going to put your information down below under this video in the description. So
Awesome.
if you guys are needing to shop around, make sure to give her a call, give her an opportunity to earn your business. I've used her. I highly recommend her. Chrissy, thanks so much for giving us information.
Well, I really appreciate you giving me the opportunity, Adam, and I'm happy to quote anybody who calls me, and I would recommend you highly as a realtor. You know your stuff. You care about people. We're on the same page with integrity.
Yes.
So
Yeah.
you'll get some business too.
All right. Thanks, Chrissy. Appreciate it.
Bet. All right. Bye-bye.
Interest rates hit over 8% this past October. Where are they now, and what is in store for the rest of 2024? I had a chance to sit down with Denzel Davis with NRL Mortgage to get those answers. A big part of the housing affordability crisis for homeowners in Houston has been mortgage rates. Here to help me go through past, present, and future what mortgage rates look like is my good friend Denzel Davis with NHL Mortgage. What's up, buddy?
Hey, looking good.
Sorry.
Happy to be here.
I already screwed up. What's your mortgage? I completely messed that up already.
NRL.
NRL. I was so close. Where the height of mortgage rates got to in like 2023.
So the worst day there was like October 19th and 20. That's when the peak kind of happened. You're looking at conventional rates for good borrowers over an 8. So FHA was a little lower, but just the market had slowed. Applications had pretty much stopped. The holidays were coming, so the application rate just went down. Very difficult to sell a home. But starting October 20th, the thing started to shift. And so over about the next 60 days, right leading up to Christmas, there was a pretty steady drop in rates of 1.5 to 2 points, depending on your exact situation. So we've gotten down now to where your average conventional loan's under a 7, FHA's lower, and there's still opportunities to buy down for some people, even into the high 5s, 5.9, 5.7, depending on the day. So it's a huge shift in 90 days.
So it was over 8% in October. I know we got close to 8. I wasn't
good. Yes, it was over 8% for good credit borrowers on a conventional loan for a moment.
That's crazy.
Yeah,
that's nuts. I knew we were approaching. I guess I didn't realize we'd actually stepped over that threshold. That's a little nuts. And we kind of jump around a little bit here. You mentioned something about buy down. If people don't know what a buy down is, can you help explain that a little bit?
Yes. So most borrowers will have an opportunity to have what's a par rate. So this is the interest rate they deserve without any extra fees attached to that rate. If borrowers want to, they can choose to purchase the rate lower. So that can be different every day, just like rates. But 1 point, we call it one discount point, would be 1% of the rate. Okay, it is prepaid interest, and it will drive down the rate. So lately, it seems like investors are making it pretty advantageous to buy down your interest rate. They're making the cost for the buy down make sense for how much value you get in your monthly savings. So
Gotcha.
This is totally up to the borrower, but any mortgage company can offer it. And lately, it's been pretty interesting to buy it down by maybe a point, 1.5.
If rates are coming down right now and they're anticipated, and we'll get to that in a minute, anticipating to go further down later this year and into 25, why wouldn't they lock into a rate and then refinance then? Why was it more advantageous to buy the rate down now versus waiting to refinance?
Well, it's somewhat of a per file basis, but if the cost of your buy down saves you enough money that you can make that money back in, let's say, 24 months, well, there's no guarantee you can refinance low enough to make it worth it in the next 24 months. So we let borrowers see what's the right word? The return on investment of that money.
Right.
And there's always a comfort level for every borrower. We can show them, the numbers, but it's really a comfort level for what it does to the payment and what it does to the cost. But while rates have dropped a good bit, they've flattened, and then we really won't know what's next until, the Fed maybe lowers rates later, and then we'll see what impact that has.
Yeah. So if I'm a borrower coming, do you could work up those two scenarios so I'd have a decent idea, kind of ballpark, like you said, on the ROI, return on investment?
Absolutely. So there'll be a par rate, which has no cost attached to it for most borrowers, especially borrowers with decent credit. And then there'll be several options to buy it down, and we can show them what those are. Essentially, each day there's some value somewhere on the scale where you get the most bang for your buck. And so we'll show them that. Not every borrower has money for the buy down. So we just have to see what each borrower's situation is and see how long they plan to live in the house. There's a lot of scenarios that go on with that, but it's certainly something the borrower gets to decide.
We're in a really unique sweet spot right now because we're in this lag time, I feel like, until the market catches up to where the rates are and the housing, these days on market start coming back down. So I don't know. I haven't said this in the last year because I didn't agree with it. And I would never tell anybody it's a good time to buy because it wasn't. I'm telling you right now, it's the first time I've said it in over a year. It's a very good time to buy.
So we're seeing, there's like a domino effect to the whole process. So we're seeing rates fall, but the holidays were still going on, and that affects every borrower differently. Some people just stall or wait till the new year, but we've gotten through a rate drop. We've gotten through the holidays. January has been a massive increase in mortgage applications. I've got more applications so far in January with 5 days left than I got the whole fourth quarter of last year.
Wow.
So the next domino is more pre-approved buyers. Okay. Then they become shoppers, and now they're competing against you on the bid. So as this thing pushes along, common sense would tell you that it's going to be harder to win deals out into the near future. And then the next step is probably more firmness on the prices, like less seller concessions, less coming off the listing price. And then the next step would be people are needing to overbid to win deals.
Everybody's got their own predictions of what's going to happen. We don't have a crystal ball. If I did, I wouldn't be doing videos. I'd be sitting on a private island somewhere enjoying my cocktails and all that kind of stuff. So let's take a look real quick at some of the heavy hitters, what they're saying about rates are going to happen this year. So these guys are all predicting 5% interest rates or even low fives. I like to be a little bit more cautiously optimistic because if I start telling people low fives and it doesn't happen, then I look dumb. So I don't put great big predictions out there. And a couple of people that I follow that I think are really close to that. There's a couple of thoughts going out there right now, and you're the expert, so tell me if I'm right or wrong. Number one is they won't get that low. We'll kind of maintain throughout the rest of the year and maybe the low sixes. And then we're also in an election cycle.
So I still think I'm with you. I would be cautiously optimistic and can't deliver since I certainly can't control the market. It would still be a pretty good drop. Usually when they talk about rates, they're specifically talking about a conventional loan. So it'd still be a pretty big drop to go down to the low fives. I think the general trajectory, the right way to talk about it is that they're probably slowly going to move down. You'll have good days and bad days, but I think that the consensus by most people is they're heading down, that we've probably pushed through the worst part. But, I don't know where they'll land. I'm also cautiously optimistic. I think it's going to be a good year for buyers. They can go out there and get a reasonable interest rate and get a reasonable price on their house. But if the faster they drop, you're just going to push more people into the market, and that creates a different issue for buyers.
So as we're now going into 2024, have there been any new changes to loan limits and any of the loans that you can share with people out there that are getting ready or thinking about applying?
So 2 key points. FHA has raised their loan limits in most counties starting at $498. There are some counties that can go higher depending on the average cost of homes and things like that. But we're here in Texas, specifically.
$498 being the purchase price?
That's the loan amount. The loan amount. So
amount.
you can have a purchase price higher and use a down payment to come below the loan amount. So it's a little over $498 for FHA, a little over $766 for conventional.
So with that program, what would be the highest amount somebody could buy or purchase on a conventional loan?
Well, if they're not a first-time home buyer, they can still take advantage of 5% down. That could be an $800,000 5% down, and you're still using a conventional loan. So lots of flexibility with getting approved, lots of flexibility to not have to put as much money down and still buy a really great house.
That's pretty great. Let's take a look real quick at a comparison of, let's just say, a $300,000 purchase home. Can you give us an idea of what the monthly mortgage payment would have been at, say, whatever the height was, over 8% to about a mid 6% now?
So I just did the math on that. The savings on a loan that's $300,000 is pushing $350,000. I'm sorry, is pushing $350.
That's a lot of savings right there, Denzel.
That's a lot of savings. That's a lot of savings. So the savings on a $300,000 loan from the worst day to kind of where we're at now is about $350 a month. So that is really strong. That is really great savings. I mean, that's a big deal.
That is a big deal. That makes a big difference in somebody's purchasing power and how much home they can buy.
It also makes a big difference in if they're approved or not. So many people that were not approved just 60 days ago are now approved. So that's a big deal, which also speaks to the fact of all the buyers in the market. Not only are there buyers that want good deals, but you've got buyers coming back into the market because they weren't approved then and are now. So, it's definitely going to get busier with the shoppers out there.
Okay, so Denzel, to summarize this, let kind of walk us through the domino effect that's occurring right now in the market and why it's a great time for buyers to purchase within the next 90 days.
Well, I think the way I would finish up and summarize is, if you really want a house, there's going to be a different market 90 days from now, we believe, with more buyers. So it's already started with a much higher rate of applications. Those people are getting themselves pre-approved. Sometimes that's very quickly. Sometimes it takes a little bit more information. Soon they'll be researching and shopping. Soon they're bidding. So if you really want a home, if you really want to know where you stand with these new rates, get with a mortgage professional, find out if you're pre-approved. Let's run some figures on with your monthly budget. But it could be and look very different 90 days from now than it does right now. We are using a soft credit pull for first reviews. So there's no real commitment on credit. There's no, ding to your credit score. If you like what's there, if it fits what you're looking to do, we can talk about the next step of a traditional credit pull, running the approval software, and then having a firm pre-approval letter ready for you.
That's a huge deal, because if people I hear that a lot. People get kind of like, I don't want it to ding my credit because I'm not sure if I'm quite ready yet. So that soft pull that you're talking about will eliminate that, right?
It will. There's a lot of misconceptions around what happens when you have a soft pull, and much of it has to do with what other credit pulls have you had. If you come into this with no credit pulls, hard pull, very little impact to your score. If you come into this and you had a auto dealership run your credit 20 times, well, another credit pull could impact it. So I love the idea of being able to sit down with the borrower with a soft credit pull, show them what it looks like, answer the questions, build the rapport. This is a big purchase. They need to feel comfortable with their realtor, their lender, answer all the questions. And then if they're ready to move forward, we just show them how to do it.
That sounds great. And for ease of that, I'm going to put your information down in the description below this video. So thanks, Denzel, for giving us some insight of what's going on and what we think might happen. We appreciate your time.
You got it. Make sure y'all get with us to get updates, because it can always change.
Next up is water billing. This is something I've personally noticed on my water bill. I also posed this question on social media, and I was pretty shocked to see that so many people have the same issues. Rick said 50%. Keith said tremendously, and Claudette said ridiculous. After I started doing some research, it didn't take long to find out there was a huge controversy with Houston city officials. So much so that KPRC investigative reporter Amy Davis did a huge story on it. Mayor Turner was not pleased she got involved, as seen by this exchange.
Mayor Turner, I'm so sorry. Will you stop payment to the contractors that are under investigation?
Let me stop.
Yes.
Amy, you're very rude. I want you to know you're not going to get away with this. You are rude.
Get away with what? I've politely, professionally asked by email for an email.
And you do not represent KPRC very well. And I've gotten to the point, well, enough is enough. You are very rude and you're not professional. And you have intruded on this press conference.
Yes.
On something else. And you have no interest in covering what we're covering today. And I am going to call your general manager and express strong dissatisfaction. There comes a point when even reporters should be bound by a code of professionalism, and you do not abide by it. And so I will not talk with you today. And
Or ever? I asked when. You named the time I asked.
I told you several years ago that hasn't changed because your lack of professionalism has not changed.
All right, thank you,
So
guys.
thank you very much.
Thank you.
It's pretty clear, at least to me, he was doing some major redirecting. After several complaints made by Houston water customers, many struggled to get answers about inaccurate bills. One in particular was $3,600. KPRC asked for 6 months worth of emails to and from 7 city employees and Mayor Pro Tem Dave Martin with specific keywords that would indicate they were discussing the city's water issues. They waited for those records for so long that most of the city employees and elected leaders are not even working with the city anymore. And Houston Mayor Sylvester Turner, who ran on a platform of transparency, wouldn't even discuss it. It had gotten so bad that even Houston City Council said,
Council members say the 7-year timeline to fixing our water billing issues is unreasonable.
I believe that this has to be expedited because this is something that severely impacts the people of the city.
There has to be other companies out there, other manufacturers that we can bring in to complete this project, because until people have that information in real time, they're going to continue to get these unreasonably large water bills.
I'm not going to release my tag on this. It's just too important that we finally going to have some type of a change in the ordinance that gives people an opportunity.
But there is good news on the horizon. Houston City Council voted on 9 proposed changes that will help resolve extremely high water bills. Councilmember Mike Knox said it's a good first step to fixing the water billing problems. He went on to say, I was talking to a lady the other day who has a $180,000 water bill. I mean, she lives in a 3-bedroom home. Where do you get $180,000? The market is rapidly changing with rates coming down. If you're looking to move the greater Houston area, tap or click here on this video on my top picks of where you should move and areas you should not move to. And if you never want to miss another video, you can just tap or click on my face right here. Thanks for watching.